Hello, my name is Rosalie Cmelak and I'm a director in our Value Chain Execution Product Strategy organization. I'm responsible for our global trade management and landed cost management strategies. Today, we're going to teach you how landed costs can be a secret weapon in a successful supply chain. So the agenda for this session is going to be, first, a look at the different roles landed costs can play in a supply chain. Secondly, we're going to walk you through the Oracle eBusiness Suite solution called Landed Cost Management. Next, we're going to look into how Schreiber Foods is using landed cost in its organization and how they turned it into a secret weapon. Lastly, we'll summarize. So to get started, I'd like to begin with a quote from a famous warrior, Sinzu, in The Art of War. He says, "The true art of war is to be able to subdue your enemy without fighting." As we all know, wars cost lives and money. Well, in your case, hopefully not lives, but can cost time and money. And the best thing to do to be successful is to outwit your competition, not spend all of your time and money fighting them. So what is landed cost management and how do we define it? Traditionally, landed cost was really just looking at the true cost of an item landed at its ultimate destination. But a more modern definition of landed cost is having full visibility to all of the extended supply chain costs that an item can carry with it from origin to its ultimate final landed destination. This can include such things such as purchase price, transportation, freight, insurance, customs duties, taxes, and any other fees along the way. So let's take a look at a typical landed cost scenario. You start with your purchase price. Let's say it's coming from China and the item costs you $100. And as it moves from its manufacturing location all the way through to its destination, across those borders, it carries with it a myriad of different charges that add up to, say, $140. This is your ultimate landed cost. Many companies have no visibility to what all of these costs can be. But what kind of risk does that mean? There are definitely hidden supply chain costs, and if your organization cannot identify those costs and manage them, as you can imagine, it can diminish the return that you're hoping to get. For example, you might know your purchase price. You might even know its freight and insurance, your duties and taxes. You expect a certain percentage of a return. But if there are other costs and fees that you have not taken into account, it can not only diminish your profits, but ultimately make your customers unhappy and cost you money. Let's take a look at the different roles that landed costs can play in your supply chain. It's important to think about landed costs as having a life cycle, just like anything else, because without understanding the phases of the life cycle, it's hard to know what kind of role it can play in your supply chain. So let's start with a lesser known phase of landed cost, which is planning. Like other supply chain concepts, landed costs has a planning aspect, and that is most relevant to sourcing decisions. This is before a purchase order is even cut. This is typically where we see a buyer trying to make a decision about a source of supply, taking into consideration all of the different costs that could be associated with each source of supply, looking across those different scenarios to make an informed decision. The next phase in the life cycle is execution. This is where we see a purchase order being created and you start to estimate your landed cost. Of course, you'll start with more rudimentary estimations, but as you get closer to the goods being received and actually getting the invoice, the estimates will become more and more accurate as you perform them. The next phase of the life cycle is financials and costing. This is after the goods have been received. You still have an estimate of your landed cost, but now you have an invoice and can compare the actuals on the invoice to the estimates that you had performed on the purchase order shipment. Next is analytics. And without this very, very powerful phase of the life cycle, it is difficult to take in all the information to be able to make informed decisions about the future. You are able to look back and identify variances. You're able to identify areas where you can optimize costs in your supply chain to change behavior in your organization. So how do all those phases of the landed cost lifecycle map back to the landed cost solutions we have here at Oracle? Well, let's start with planning. Prior to PO, global trade management can help companies perform what-if scenarios in order to choose the best source of supply based on an overall estimated landed cost. Next, we have execution. This is once a purchase order has been cut all the way through to the point of receipt of the goods, the ability to estimate those charges over and over again as many times as needed in order to have the most accurate estimate. The Oracle solutions that we have here are really part of the ERP solutions, like eBusiness Suite, like PeopleSoft, Oracle Retail, and Fusion. Next is costing. The Oracle footprint here is also the ERP solutions because this is really where landed cost got its start, is the financials. Closing the books each period and understanding what the costs are so you can update standard costs for the next period. Lastly, we have the analytics module, which is really the global trade management solution that can help you look at historical data to make more informed business decisions. In global trade management, we have the WhatIf Scenario, and this is something we're planning for release 6.4 sometime in calendar year 2015. What you're looking at here is a screenshot of this new feature set called ELC. And what it's going to provide is that what-if scenario capability for a GTM user to help a buyer understand all of those extended supply chain costs. Define the cost model, look at customs duties and taxes and fees, plug in purchase price, freight, insurance, and you have your ultimate result. Next, we have the other ERP solutions, which is really the execution aspect. If we look at other ERPs like Fusion, PeopleSoft, Oracle Retail, they're all really focused on that financials aspect of landed cost. That's why they have these features in those solutions, because it was required for financials. Today we're going to look at the Oracle EBS landed cost management solution, which helps companies really do that estimation from PO creation all the way through to receipt. When the invoices come in, you'll see how it gets matched against the estimates to identify any variance. LCM came out and released 12.1 of EBS, and we've had a great run in terms of getting customers up and running on it in the Middle East, North America, and even Latin America. We've had a lot of success in the process manufacturing industry as well as in other industries like industrial manufacturing and retail. Now I'm going to hand it over to Mario Nobre. He's our product manager in EBS landed cost management. He's going to walk us through the solution and show you some recent highlights of how we're using Endeca to make landed costs an even more powerful weapon in your supply chain.
Thank you, Rosalie. My name is Mario. I am the product manager for landed cost management application, and the idea is to show you how Oracle landed cost management works within EBS applications. First thing to mention is LCM works on the procure-to-pay flow, and the first LCM calculation point is when the PO is created. We call this as a simulated landed cost, and the idea is to show the landed costs to the buyer to allow him to make better sourcing decisions. The second calculation point is when you receive the goods. We call this point as estimated or estimated landed cost, and we use that information for item valuation and accounting. The last calculation point is when we are capturing invoices and we take the invoice information and redo the landed cost calculation for better accuracy. We call this point as an actual landed cost calculation. So when we do simulate the landed cost during the PO creation, we apply the rules or the cost models to define the charges, and then we calculate the full landed cost for that particular PO. The basic idea, as we said, is to drive better purchasing decisions based on the full landed cost instead of just the PO price. The second point that we calculate landed cost is the estimate, and we call this the estimated landed cost. Basically, we are recalculating the landed cost at this time. We can reuse the information we have from the simulations, but the idea here is to use that information for accounting purposes. If the landed cost changing from the actual to estimate, we will capture that, but we will record on the books only the estimated landed cost. And LCM has two implementation flows, meaning that we can calculate the LCM prior to receiving application or prior to entering the receiving. This is for companies that generally has complex shipments or companies that receive items from consolidated shipments from abroad. For instance, a company based in Mexico importing raw materials or components from China, and then you have many suppliers and you combine all the shipments in a single big blended cost shipment that contains those multiple PO suppliers with different suppliers. And we have another flow, another implementation flow that the landed cost is calculated during the receiving transaction, meaning that the landed costs or the landed cost shipment is based exactly on the shipment that you have created. So the second flow is most beneficial for companies that have simpler or not many suppliers in a single landed cost shipment. The actual landed cost is calculated based on the invoice information. So LCM takes the latest or the actual prices from the invoice, recalculates the landed cost, and then posts the any eventual landed cost difference or variance to the cost in application as a cost adjustment transaction. So you can see in the screenshot that we have 3 columns: estimated landed cost, billed amount, and actual landed cost. This corresponds to the estimated landed cost and the actual landed cost calculation points. Another very important functionality from LCM is the landed cost analysis. In this page, you can leverage all the transaction information that we have collected from estimated and actual landed cost calculations and use that information to review to your landed cost, to compare landed cost, and track variances with the prime objective to make better decisions. Okay, so let's now have a quick demonstration on the landed cost analysis page. So the first thing, we will log into LCM, and you will notice that there's this new page, landed cost analysis. On the top, we have some key metrics for all the selected items, so you can see what is the charge portion or the item variance. We have also a cloud component that you can see the most important items or charge components. But we wanted to focus the demonstration on this information that we are showing now. On the left side, you can see the landed cost summarized for all items. So we are talking here about the total value of the item. So you know at the first glance which are the items that you transact most. On the right side, on the chart on the right side, you have historical view of the total landed cost, but you can see the estimated actual and also the variance percentage as the green line. On the bottom, in the landed cost analysis page, you will always have a table on the bottom that shows you the detailed information that is being consolidated in the charts above. So now let's change our analysis, and let's say that we want to analyze with the landed cost as a unit landed cost base. You can see that the charts changed, and we now have a new order, and the item that is most expensive or the higher landed cost is not the one that you transact most. On the right side, we will also change the analysis to the unit landed cost. Now you can see the variations estimated versus actuals from a unit landed cost perspective. So let's now choose to analyze just one item. All the charts and information on this page is now refreshed to show the information from this single item. We want also to show that you can easily change what is the perspective that you are analyzing. So we want now to see the variance amount for this particular item, meaning which is the total variance for this particular item. And you can change also to review that by supplier. So it's just a matter of selecting party, and everything is refreshed to this new dimension. On the right side as well, on the chart on the right side, I can choose also to analyze the variance. So I just wanted to show that it's very easy to use the transaction information to review or to get how your landed cost is, and you can summarize or you can have a detailed analysis with just a click of a mouse. Just going to the cost comparison tab. On this tab, we want to show the comparison of the item landed cost across suppliers that you can see. But we can easily compare by country. So now you can see what is the item landed cost, the total item landed cost for these different countries from China and US. You can choose to analyze as well only the item portion of the total landed cost. You go to the chart, and now we are seeing just the item portion, or you can also choose to analyze only the charge portion. So you can realize, or you can have very good information to drive your next purchasing or sourcing negotiation. The last chart that tab that you want to show is the unplanned charges. So basically here you can see which are the charges that you have been billed for, but you haven't estimated. So you can see the charges broken by suppliers, or you can change that by country. So it's very easy to change and to change the dimension you want to analyze, and it's very used to check and review and analyze all the transaction information. And we think that this page is very beneficial to help you to get visibility on your landed cost, on the dimension you may need, and also it is a very useful tool to help you to take better sourcing decisions.
Hi, I'm Rosalie Cmelak, and now I'm going to walk you through how Schreiber Foods, an Oracle eBusiness Suite and landed cost management customer, discovered the secret of landed cost. Schreiber Foods is over a $5 billion company, and they're based in the Midwest. They are a dairy company, and they have over 7,000 partners, which are their employees today. They have a big Oracle footprint. As you can see, they have process manufacturing, purchasing, inventory, order management, financials, landed costs, and asset management. They're using Lean Logistics for their transportation system and JDA for their demand planning. Why landed cost at Schreiber? How did they start their landed cost journey? They had a really traditional view of landed costs in the beginning. A few years back, they started asking questions about, well, what are all the costs we have associated to our items? But they really wanted to use that more for a financial purpose. And it seemed very cumbersome at the time to maintain all of that acquisition cost detail. They really truly thought of it as a finance project, and it got put on the back burner. It didn't get legs. But what happened is, while it was on the back burner, some questions started to come to the team which they couldn't answer. And a few years later, they got funding to move ahead. What happened was they actually uncovered some secrets. Questions that they couldn't answer to their upper management. These were senior management folks asking questions like, what are overall freight costs? What are our pallet costs? What are our expediting costs? Because guess what? They were finding they were really paying a lot of money on expediting when they had no idea how much they were paying to expedite. And really at the C level, it's what are our overall cost to serve individual customer needs? Thus began the landed cost journey at Schreiber. The secrets that they uncovered and the answers to those questions actually became very useful tools. For example, they didn't even know they were being charged for pallets. They didn't understand they were being double charged for freight, sometimes paying both the vendor and the trucking line. They never even knew their expediting costs and who was expediting what and for what customer and when. They had no visibility to these costs, and that really hurt them and their overall profitability. So what they discovered was that by looking at landed costs in a more modern way and having visibility to all of the extended supply chain costs that they were incurring really became a fundamental component of their overall cost to serve strategy. This is because for every customer Schreiber has, they would procure materials for each unique manufacturing job. They would sometimes, because they were 99.9% on time, they would procure materials at any cost, thus the expediting fees. What they found was they were able to not only identify these costs, but use them in a very strategic way to really capture that cost to serve price. So now management could have visibility into all of those costs and control them, which means they could change behavior within their organization. They could train people that you don't have to expedite. There are other ways to serve that customer and get that 99.9% on-time rate. They were able to streamline their financial processes because what they did was they actually coupled their landed cost management system with their automated invoicing process to give upfront visibility to the buyer costs prior to even paying. So let's summarize. Let's take a look at how landed costs can be a weapon for different users in your organization. We'll take 3 different users in sourcing, procurement, and costing. Let's start with sourcing. In this case, this user is able to look across sources of supply to make a simulation of all of the costs that you have defined in your cost model to make a more informed decision about what supplier to select. This is taking into consideration all of the charges that you've identified that could be associated with that item. For a procurement user, it's really looking at What are the different charges of this that are going to be calculated for this PO, and maybe use it as a negotiation tool with a supplier. You've already chosen your source of supply, but now you're in a negotiation phase and you're trying to optimize specific costs. You can also update, this user can use the PO to update estimates along the way, all the way through receipt. For the costing user, it's really understanding how to update costing such that inventory and valuation and the item cost really reflects the actual costs from the previous period. In summary, landed cost is a strategic and tactical weapon in your supply chain. Landed cost isn't just a financial tool, although that's where it was started. Truly can be strategic if you use it as a procurement or a sourcing weapon. It starts with understanding your corporate or supply chain objectives and how landed costs can be used to achieve those objectives. And Oracle provides a comprehensive footprint to provide landed cost support for every stage of the landed cost lifecycle, from planning through execution to financials and analytics. Think about it. How will you start the conversation in your organization? And with that, I leave you to think about Sinzu and how to use landed cost to outwit your competition. Thank you very much.